All right, good morning, Helaine. Really excited to be here for
Morning.
today's edition of Trade of the Day Live after the long weekend. Really excited to be sitting down with you. There's a lot of action happening in the market today. Some really big events that traders, investors should be aware of coming up later on this week. But yeah, excited to sit down and be breaking it down with you here live this morning.
Yeah, I'm excited to be here too. Happy to share some trades and some ideas on the market.
Yep, absolutely. Well, everybody, I hope you had a great long weekend. Hope you enjoyed the nice holiday weekend. But we're back here today. Obviously, the markets are moving, and we're here, and there's important stuff to discuss. So, Helene, I'm sure you, like many others out there, probably caught the late on the day headline last week on Friday. Right as we're heading into the long weekend, there was a very significant court ruling that is, I think, driving some of the price action in the markets today. It was when the tariffs that have been put on by the current administration, by President Trump,
Hmm.
there was a U.S. appeals court that declared them to be unconstitutional. Of course, this is certainly not the end of the road in the courts. It's undoubtedly going to be, dragged out, probably appealed all the way to Supreme Court. And even if they were to rule against the administration, it's probably not even over yet there. But even just casting some uncertainty after we've just gone through all of this tumult in the market, with having the tariffs rolled out and, everything that had come along with that, there's a lot of factors at play. And, when I first saw that headline on Friday, I mean, Helene, I thought there was a good chance that we could have kind of a face-ripping rally potentially today because of the potential of, obviously the market doesn't like these tariffs net
Of
net,
course.
right? You're weighing it out, but, I thought that there'd be a potential of the market having a really strong rally today, at the potential of these tariffs possibly being removed by the courts. But in fact, sometimes the market throws you a curveball and a bit of a surprise, and we got exactly the opposite today. In fact, we saw Treasury yields spike today because there's the potential, should depending on how courts rule and if this ruling gets upheld, there's the potential that all of the tariff revenue that's been collected by the United States could possibly even have to be refunded. So that, of course, has driven up treasuries. That's putting pressure on stocks. Obviously, we're sitting right now roughly near session lows right now. But that, it's not exactly how I thought it would have played out, but it does make
Me neither.
sense. If that is the ultimate outcome, I would say probably that's pretty unlikely. That would,
Agreed.
this is just the market. It's just, it's a discounting machine. This isn't just
Hmm.
trying to factor that in today. But Helene, I'm going to go ahead and share my screen here.
Yeah, and
So,
the market just hates uncertainty. So whenever there's
exactly right.
some new uncertain conditions, it's going to take a minute for it to digest the news before it can continue on.
Exactly right. So that's exactly what we're seeing today. And again, we're roughly near session lows. This is looking at the S&P chart right here. Of course, we're down, just about 1.5%. But, again, if you look at, just about a week and a half ago, Helene, if you look at where we're trading now compared to then, obviously markets are tensing up heading into the Jackson Hole speech with Fed Chair Powell.
Of
We got,
course.
we got that really dovish tone from him in his speech, which the markets celebrated. That, of course, this is that Friday when we got the speech right there. But if you look, where we are right now, call it, 63.60. If you look at where we closed the Thursday, prior to that meeting, we're back to exactly those levels pretty much. So we're sitting right there. We do have some support on the markets because, of course, the market traded down, found a new higher low here. So it found some support and then, of course, rallied that next day. So we're back down to that first key support level there, Helene. But, definitely some key support levels also coming up too, that I think traders should be aware of. Do you want to point out where some of these are on the chart right here?
Sure, sure. I mean, we definitely would see support, of course, that earlier August low, but then that was at the 1st of August, it looks like right there. That would be a really key support level.
Hmm.
Because if it were to fall through there, then you would be pushing back to a new support that was from back in June. And
Exactly.
that would be quite a uncomfortable period, that's for sure. But nothing that would be too surprising given the extreme run we've been on, the bullish run. And also, I think it's important to note the sentiment entering into this month. Everyone's saying it's September, buckle up, get ready. It's not
Yeah.
historically and seasonally speaking, smooth sailings this time of the year. So, it's important to keep all those things in mind.
Exactly right. And, I think it's a good comparison to draw to the first trading day of August, like you just pointed out. Again, people are saying the same things heading into August too. And, we were
Oh
sitting
yeah.
near all-time highs, at the end of July's trading. You would get that first day of trading action in August. We get a pretty significant risk off day, and then we almost immediately rally from there. People were just saying, oh, and rightfully so. I mean, if you do look at the historical data, seasonally, we are entering, with between August and September, typically two of the worst performing months on average for the S&P 500. So, it's certainly backed up by the data. Again, doesn't mean it's going to play out this time, but I think you have seen a bit of a risk off trade, at least, people just taking some profits, taking some risk off the table heading into August and then now September too. Again, just because of the seasonality, again, like I said, it doesn't
Hmm.
mean that it's going to play out that way every single year. If it was that easy, again, we wouldn't all be here, trying to find these opportunities in the markets, if we just knew what it was going to do every single day. But, again, I think that's largely what's going on. It just plays into trader psychology. So we're seeing a bit of a risk off just heading into the new month. And again, Helaine, we can come back to this chart, but we were on a nice stretch there of really, I mean, last week it was technically down. This is a weekly chart of the S&P 500, but we were essentially 4 weeks where we had risen. The difference here was 6 points, so it was essentially flat here. So we were on a really nice stretch. It was certainly, the market was due for a bit of a give back here. After hitting again just new high after new high. But we do have some really key support levels to watch, like you just laid out there, Helaine. Again, that August low. Of course, we do have the rising 50-day moving average too. So certainly a handful of things to be looking out for there. And I think we're also still seeing a good bit of rotation play out in this market too. Helaine,
Absolutely.
so if I think this is you know a decent indication of kind of what's going on under the surface today. If you look at just some of the internals, it's about a 75% down day looking at the volume through the NYSE. So obviously that's reflective of looking at this heat map here of the S&P 500. Very few places to hide in this. This is of course looking at the daily performance. So um, you can see a couple pockets of green. You see some up here in consumer defensives, in the
Mhm.
staple names. You see some pockets of healthcare, that are in the green today. But, pretty much, essentially across the board, you're seeing a lot of risk off, particularly in those names that have been, the big momentum winners, have been the market leaders this year. We've been seeing that play out for a couple of weeks, a lot of rotation out of some of those names, out of the momentum, out of the growth names into other pockets of the market. And, I think to a degree, we're still seeing that today. Um, just maybe, even though we had seen some of that rotation, it hadn't necessarily gone as much into healthcare and the consumer staples. Those were still somewhat lagging. It was kind of being redeployed into, the financials and the consumer cyclicals, discretionary, industrial. So, you're starting to see some of that money spread out now into healthcare and consumer defensive. So, I think that's really all we're seeing today. Helaine, is there anything you would like to add to that?
No, yeah, I think what you said about the biggest momentum movers are now taking the biggest hit. That's typical when we see these sort of sell-offs. The ones that benefited the most from the previous bullish run are typically taken out and hit the hardest on a correction like this. And also, I'm getting a little excited. I know it might be early, but I'm getting excited that healthcare might find some traction. I've been waiting a while for this. So
Definitely been lagging for some time. That amongst several other sectors. So that staples, energy is also showing some green down there. Energy's just been just it has not worked at all really of late. So maybe you're going to start seeing some uplift in some of those names. Some of those smaller sectors that have really been lagging behind. You could be seeing some early signs of that happening in the market right now.
yeah, we'll see.
So, Helene, anything else you want to add from the technical overview before we hop into our trades for today?
No, I think we're gonna go ahead and hop into the trades.
All right, let me go ahead and pull up mine. So, kind of playing off the theme we've identified clearly in the market today, Helaine. We're, still continuing to see, a bit of a risk off in the momentum names, seeing some rotation into the, again, the lagging sectors of the market, the healthcares, the staples. That's kind of how I landed on my trade for today. So this is for Medtronic right here. They're a, a major player. They're a $120 billion market cap company, in the healthcare medical equipment space. And you can see the stock, even though the sector has been really lagging quite a bit coming out of the April lows, this stock, it's had some volatile trading. There's been, some big spikes and, a couple days, have some, big gap down days. But overall, the trend, it's very clear over the past, 5 or 6 months. It's been, coming off these April lows down here, it's been trading up, particularly since the low, it retested those lows in late May. Since then, it's been on a very consistent series of making higher highs and higher lows. And it's on the verge right now of making a new 52-week high. If it closed at the current price level right now, today would be a new 52-week closing high. Hasn't quite hit a new intraday high quite yet, but at current prices, it is breaking out to a new 52-week high. Really like to see that on a bullish setup in the market. Of course, we have the good trend line buy signal underlying this trade right here, where we have our red line. It's our 21-day EMA. It's trading above our green line, which is our 63-day EMA down here. You can see the distance between the two of those is widening out. And of course, the share price is also trading above both of those. So some really, strong buy signals looking at just the trend lines right there. And then, of course, we have our Keltner channels overlaid on the chart too. That's going to be our blue lines up here. So we have our upper Keltner channel band. That's our blue band right there. And then our lower band, and then our dotted one here in the middle. So we can see, despite the really strong trend that Medtronic has been on over the past couple of months, and the stock's breaking out to new 52-week highs today. Despite all that, the stock is still trading inside of those Keltner channel bands. So that's offering us a really attractive entry point on this healthcare stock that's in a very nice, strong, durable uptrend. And we're also seeing some good momentum shown and reflected in our short-term RSI chart down here too. We see that RSI spiking. It's rising, so that's, again, just another nice indicator of strong momentum in the short term behind the stock. Also, it's trading below 70, so again, confirming that according to the technicals, Medtronic is not overbought at these prices. So, Helaine, the way I'd look to go ahead and play this one is actually with the call option, and I actually
Okay.
went out. They do have weekly expirations on this one, but I was trying to find one that had, fairly decent open interest, some good liquidity on the option. So I actually went out to the October 17th monthly expiration and
Nice.
went a little bit in the money. So I actually landed on this 87.5 right here. You can see it's currently trading at 6.83. So that is actually the call that I would look to enter right here. So this one right here, I'd go ahead and buy to open one contract of the 87.5 call right there. That's how I look to go ahead and play that trade right there.
I like it. No, that's
Yeah,
a
thank
great
you.
trade, Blane.
Appreciate it. Thank you. Yeah, I was excited to see that one in a rough tape today. I thought it was a pretty good looking setup.
I'd agree. Yeah, not many bright spots today, that's for sure.
Yeah, for sure. Well, I'm excited to see what you have too, Helaine. So let's go ahead and see your trade for today.
Yeah, let me go ahead and pull it up. Okay, so thinking back to that heat map where we're seeing the green today. Oh, let's see. There we go. Healthcare was a bright spot. And if you're like me, I've been waiting a while to see healthcare really start taking off again. And I'm hopeful that they will. They've been lagging for quite some time. And here we have J&J that caught my eye, and
Hmm.
they have just been on a great trend. I mean, as we know, in April we saw that market wipe out, and then a lot of those momentum players really took off straight to the hills from there. Well, J&J was different. It consolidated for a couple of months in this April through July period. And then around the start of July, it started to accelerate in momentum and started to trade higher. We started to see signs of a breakout. Specifically, we're seeing it trade above the 35-day EMA, the 200-day moving average. We're seeing a series of higher highs and higher lows. We're seeing trading consistently at or above that upper Keltner channel. These are all really strong signs of a bullish breakout for the stock. Additionally, new 52-week highs. So just all of those buzzwords that we like to see, technically speaking, we're seeing with J&J. And then I really loved this recent price movement It was trading consistently above the upper, it pulled back towards the middle, and now it is clearly starting to bounce from here. That is a very bullish movement. That is one that we like to see. We often see in our entries. So that pull back towards the middle and then a bounce higher. And that usually is indicative of a further leg higher. So I am looking at a bullish position, and it's a little bit of a different bullish position. And before I jump into it, I did want to say J&J is currently trading below the upper Keltner channel, which means it's in the buy zone, which means it's not currently overbought and it's a good time to buy.
Yeah, it's a killer looking chart there, Helaine. I have to say, again, in the current market, I hadn't seen that one quite yet. I hadn't spotted that chart, but that, might be one of the best looking trend lines and charts I've seen in this current market. So that's great looking setup there. I'm excited to see how you're going to try and trade it.
Thanks. Yeah. So the trade I'm looking at, it's a little bit different, as I said. I'm looking at the September 26th option expiration. I'm going to do a debit spread, but if
Hmm.
you are familiar with the Hughes optioneering debit spreads, typically we do deep in the money debit spreads, and that gives us downside protection and it limits our profit potential, usually around 25% profit potential. So today I'm doing a bit of a different spread. I'm actually going to be straddling the stock price with the strike that I'm buying and selling. So I'm looking to buy the 175 and sell the 180. As you can see, the stock price is right in between those two strikes. And you can see here, first of all, is a low cost trade. It's
Hmm.
291. But then looking at the potential profit and loss and all of that. So in order to break even, the stock has to be trading above 177.91. That is less than 20 cents above where it's currently at to break even. Okay. And then the max profit is actually 209. So that is a huge potential profit. This is going to act more like a call option purchase, but it has a lower cost basis compared to when you pick a call option that meets the 1% rule. So I'm going to go ahead, I'm going to enter this position. Of course, this is a limited risk, limited return trade, but it's a lot higher return than we typically do with call option debit spreads. So
I
we
love
can
that.
have
Yeah, really aggressive call option debit spread play. Very nice.
I'm gonna go 291, which is halfway between the bid and the ask, using a limit order. I'm gonna submit that order.
Nice. I like it, Helena. That's a really interesting trade. Yeah, I know that's a strategy you and I have been, talking about here recently and have been, starting to implement it somewhat. And that's a great way I think to play this one. You still again, you still have the, some of the benefits of having a debit spread, of course, collecting that call premium to lower your entry cost.
Hmm.
It has a little bit more defensive nature to it, again with that short call leg of the spread. But again, having that one that's, kind of riding the current stock price, straddling it, that's a really interesting way to play J&J. Again, the chart looks awesome, has some really great potential upside. I really like the trade. Great job.
Appreciate it. Thanks, Blaine.
Yeah, absolutely. Well, that's just about everything we had chart wise today, Helene. I know we did want to mention, again, some really key, events coming up this week. We have a handful of major earnings reports. We do have coming up on Wednesday and Thursday. We have the report for Salesforce, and we also have Broadcom, AVGO. So, a big name in the AI space there, as well as software. Obviously, software. Despite tech being one of the major leaders of this market this year, obviously software has pretty significantly lagged behind. That's been somewhat of a symptom of AI trade vacuuming up all the investing dollars it seems like in the market. So it would be very interesting to see how Salesforce reports. We've gotten a couple other software reports recently that were a little bit stronger than expected and got some really nice moves out of those stocks. Obviously, Salesforce is one of the best known space or names in that space, so be an interesting one to watch. Of course, Broadcom, really key name in the AI trade. Big chip maker, chip designer. So be watching that one. Then, of course, Helaine coming up on Friday. Really big macroeconomic day today. We're getting the August jobs report. Clearly a lot riding on that, particularly keeping in mind there's the Fed meeting coming up in just a couple months. That's a really key input into their decision. So,
Oh,
uh, you
yeah.
know, the last jobs report, we remember that was not Didn't go over that quite well. We got a pretty significant drop from that. It was really disappointing. So hoping to see a bit of a stronger result from that one. So certainly something to be aware of and for traders to be keeping their eyes on heading into the back half of the week.
Absolutely, yeah, a lot going on. Just gotta take it in, and hopefully the market absorbs everything well.
Yep, exactly right. Yep. But in the meantime, we're going to be watching the charts, seeing what they're telling us, and trusting the message from the technicals. That's what we do, and we'll be here continuing to be live with you all, sharing it here. And Helaine, are we going to be back on Thursday? I can't remember. I know we have a trip planned, so I'm not sure if we're going to be here on Thursday or not. If we'll have to wait for the next session to be on Tuesday, so might be TBD to on
Yeah.
Thursday, guys. We might have to just check our schedule and see if we're able to hop on live. We have a little trip coming up here. Not sure if we'll be able to hop on, but if not, I'll be looking forward to see you back next Tuesday.
Yep, we'll see you guys definitely next Tuesday, if not on Thursday.
Exactly right. Yep. Well, great job today, Helaine. I think we
You too.
brought a lot of interesting things. Hope everybody enjoyed the call. Everybody watching at home, thank you so much for being here live. Really appreciate you taking some time to join us. And again, we'll see you back here soon. Take care,
Yep.
everybody. Happy trading.
See you guys.